Welcome back to my final Morning Report Charles Appraisal on Thursday, the 30th of June, with me, Richard Perry, market analyst at Hansard Markets. Let's look at gold, and we're seeing basically what on the gold price I think is a consolidation, and I think that gold is sort of trading in a band really between the breakout point at 1306 and 1335, which is the reaction high just sort of post Brexit. I think that's sort of forming consolidation, but I think that gold, generally speaking, is a bullish chart now. You sort of got these higher lows in place over the time, and you see higher highs. The breakout above 1306. I think, generally speaking, rallies, little minor corrections are being bought into. You've got all the moving averages rising in bullish sequence. Generally bullishly configured momentum, although it's not seriously strong momentum. Still, I think there is an argument that this is bullish momentum, and the fundamental arguments I think also back up further support for gold, and I think corrections will be bought into. So you look at the sort of hourly chart and you think, well, okay, post Brexit we had this strong move. In reaction to the Brexit, we had this strong move of 1251 up to 1358. The fib retracements of that, 50%, pretty much bang on here, 1304.70, pretty much bang on 1305.20, and the 23.6% fib level has provided the resistance as well, 1333 area. 1335 is the actual high, but it's certainly around that area, seems to be. So you're sort of trading between these two fib levels in the last few days, really, and that has been a consistent theme, really, isn't it? So I think these are two levels you need to look out for. I think breaking below that 50% fib level, you could argue 61.8%, but you could also argue a top pattern completing, which would imply around about 1275. If you sort of measure 1305 up to 1335, measure that lower, 30 ticks lower, $30 lower, around sort of 1275 area. So I think that would be where you'd start to find the support coming in. I think that's a pretty decent area, because I think if you look at this chart again, you're sort of now trading above this old pivot line. 1260 was an old pivot. You're sort of trading above that now. So I think any sort of port above 1260, I think is a decent buy level now. Obviously 1251 is a key low, but you've got the uptrend into place now, and I think you're sort of now beginning to continue this upside move. It's going to be choppy. I think gold over the last few months has been choppy. It's sort of formed this trading range and then broke out to the upside. You might see a dip back into it, I think, in the coming weeks, potentially, but I think ultimately higher highs and higher lows is going to be continued. So I think any sort of corrections on gold is going to be bought into. For now, I think it's a consolidation play in the next few days. Just watch out for the possibility of a loss of that 1305, though. I think that would ultimately be a buying opportunity, though. So I wish you good luck in the trading on gold, and I will speak to you again tomorrow. Thank you.